Greetings, Jedi traders. David here of TradingFibs.com to bring you state of the indices for the month closing out January 2016. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. To support your knowledge in the market, see what was going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Well, 1 month down, what a ride it was. After 3 weeks of selling, the market on Friday found some lift after consolidation at the lows. Tough week with FOMC minutes, GDP, some big econ numbers. They kept the market in some choppy waters. Market really appearing to be technically in limbo at this point, while there are always ticks to be made on some nice intraday swings. We remain in a daily, weekly, monthly trend downside with the short-term pick right now in a bearish neutral. Surely doesn't do well for any long-term positions. However, daily gap and open VPOCs remain above and some below. All viable targets on any given day. Friday session appearing to be the breakout of the week's consolidation, with it being the end of the month, perhaps a contribution. Highlights of our week continue to be the 5144 EMA chart has guided the bigger trend in conjunction with the other charts, whether it be downside or upside target of choice. The T3 cross in conjunction with the 5144 EMA 1 minute chart continues to be a force to contend with when wanting to remain in the trade for the long term. No guarantees of hitting targets far off every day. However, the highest probability entries and trade management gives you that chance. So we'll take a look at that at the end on this week. The weekly index recap focus was the ES. All right, jumping right into the volume profiles, we can see market price action here. Again, speaking of those consolidation off the lows, if we were to pull back on any of these charts, we could see price action really over the last couple of weeks has been at the lows. Here we see 41.42 on the NQ 600-day VPOC, price action consolidating there. 15.921 on the YM. Check that out right there, 15.921. Majority of the trading taking place around that major volume point of control. That is 600 days of trading. That is the mean of 70% range. So we found some support there, and obviously Friday action all across the board, bouncing outside. So TF Russell up here in the corner again, closing out VPOCs. Not much to the downside. 966 is our only line downside. The rest continues to be upside. That eventually the market will go out and continue to close as we see each week. YM, that 15.921, one level downside, 15.546, with plenty of room to the upside, closing out that point of control around here around 16.300 from Friday's price action. Again, same picture on the NQ. Look at that, 42.6375. Apologize, that 41.42 was not a VPOC. 42.6375 was the major VPOC. And finding some other points of control here, closing those out. So no wonder the market rose there and pretty much stalled out on Friday's price action. ES again closing out that high here on the volume point of control, which was at let's see, 1917.50, rising above that and closing out at the highs again, 1835 to the downside, with plenty of room upside. Now, as we'll take a look at the long-term picture, 2075 is the 600-day major VPOC. Perhaps the market will rally up there, yet to see, but that might be a magnet to the upside, whether we continue upside or come back down to close out unfinished business, or the market's just not ready to go back to the highs. Eventually we'll see. Again, week by week basis, day by day, intraday. That's all the best we can do. All right, here's crude. Crude again bouncing off the lows with plenty of room to the upside. Major VPOC up here, 49.16. We'll show you some of those major open gaps here in a little bit. But again, crude really bouncing off the lows here. We came, what was it, last week, I believe. We came down around here, 27, about 27 and a half, and price action just continued to push up here. Again, whatever news source you're listening to, whatever, watch the charts, guys. We'll talk about that, wrap that up today. But, you know, whether crude is headed back up to the 30s, 40s, or we're coming back down to the 20s. Again, that's a day-by-day basis. But as you can see here, crude continue to make a little bit of push up and closing out former VPOCs, but still room to come down. Let's jump right into the market profile. Here we can see on the TF Russell, price action for the week opening up around 10, 11, 12. Here's the big picture from pretty much the last half of January. We can see price, if we remember last week, that drop here on January 20th. But then this week it was pretty much sideways action. Monday, Tuesday, Wednesday, Thursday, closing out former points of control, and also but leaving some open gaps in the wake. 991 is a level that the Russell that for so many weeks had been upside and now came back downside, closed out a lot of unfinished business. So yes, the market will eventually come down and closes 991. When, I can't tell you. I could just tell you that eventually will happen. So weekly opening price here at 1011.2, finishing out here at the high 1035.1 on that incredible market action on Friday, last day of January, as all four indices just ran it up all the way. Early entry at the beginning of the day almost could have put you in a winning trade all the way to the highs. All right, let's take a look at the market profile on the YM. Same picture, leaving some open gaps down below, but really taking care of business, much better than the TF Russell that we saw. We don't have any open gaps downside, plenty of open gaps in business upside. Weekly opening price here around 15,973 it was. Finishing up here at 16,345, so gain for the week after 4 days of consolidation. But that's what I watch. I watch those open gaps. See, hey, is the market have any probability of continuing to the downside? And as long as we continue to close out these open gaps, the market will find support and continue to push upside. So a nice healthy gain there for the YM. NQ, not as much sideways action, more downside action this last week. Again, it was the NQ almost driving the market down with key economic data from Amazon and Facebook and Apple this last week. 42.38.50 was the weekly opening price. You can see the majority of the week almost coming down to right here around 40.90, and then really kicking up on Friday with the rest of the market closing out up here 42.63.75. So a little bit of a gain for the week. YM having really the biggest gain there. Looking at the ES, that was the trading session focus for the week. 1861.25 remains the downside gap here from January 21st that has not been closed out, but taking care of business. 1881.50 the next open gap, and right here weekly opening price at 1893.75 and closing out up here at 1928.25. So again, just as the YM and all four indices closing to the upside. Taking a look at the crude. Crude, again, we mentioned earlier, has been, after moving down to almost 27.50, has been bouncing off those lows and continuing to move upside, leaving some open gaps behind, 30.50, 29.80, but weekly opening price at 30.83 to finish out up here at 33.74. Again, dashed lines representing open gaps that have been closed with plenty of room to the upside as market has left a trail of open gaps as the weeks have rolled on and market on the crude has been coming down. All right, we'll take a look at the big picture here in a moment. All right, let's go ahead and take a look at the technical bias as we're leading into Sunday's session, and then get into the big picture. Actually, let's come back to this. We'll get back to that in a little bit here. Let's just take a look at the big picture for the Russell. Long-term pick finishing off the week to the upside. There it is, bullish on the 50-tick range chart. So we're looking at the bigger picture. We're looking at three pictures here. We're looking at the big picture. We're looking at the well, let's go ahead and actually show you this here, how I use these charts. Basically what we're looking at here is we're looking at the Globex position, the short term, and the long term. So we'll return to this chart here in a little bit to look at where we're headed into Sunday's open. But as we look at the charts here, we're looking at a Globex position. The Globex typically are the two charts up on top right here, the 50-tick range chart and the 4-hour chart on a T3 moving average. And as I can see here, all Friday's action, which we just mentioned. A nice swing back to the upside. T3 crossover, 5 above 34, 4-hour chart, all in bullish trend, supporting the move to the upside. So Globex position from Thursday night into Friday's open was all in the green. So there it was. Short-term positions, the chart here in the bottom left here, as you can see on a 4-hour chart, on a 50 144, as we can see price action now button up here against the 144 EMA. Now, if that 144 holds support, then this market not really going to perhaps go up and grab maybe a 50% fib line from the high to the low, or 61.8, or actually close out some of those upper open gaps that we have here on the TF, sitting up all the way at the highs here around even around 11:30. So got to get that price action above that 144. Obviously, the Globex picture here, or intraday picture, as long as we're in the green, will continue to drive this upside. But right now, a little bit of resistance here. The downside picture on the TF still remains in the green, even though the daily showing a little bit of signs of bearish. Still bearish. We're still 50. We're still underneath the key moving averages here, but on the dailies, but we are holding above the 5 SMA, so giving a little bit of a bias to maybe a shift here. So Globex together with a daily shift towards the 50 period moving average. On the weekly and the monthlies, we still remain downside. So there's your TF Russell YM. Taking a look, same picture. It was all in the green from Friday session, in the green going into Sunday. Price action found a little bit of resistance here at the 50 period exponential moving average, but now breaking above the 144. Again, we haven't crossed upside yet, so right now the buy is still bearish, but a little bit of what I would call a bearish neutral, as price action holding above the 144. Big picture still remains downside on a weekly and a monthly. Daily, same picture as we're approaching that 50 EMA. Holding above the 5 SMA, so that's a bearish neutral. Again, we're approaching that 50%. We held to that October 2014 gap. 50% line here on the YM. Let's get that level there, 16,513. Break that 61.8. We have a trend change that will go up and grab those other 3 open gaps that we have listed on the technical bias sheet that's posted each day on Twitter. Let's jump right into the NQ. NQ here, again, same picture as it continues to move upside on the T3 moving average crossover. That's our Globex position with day trading here. Intraday 75 tick and a 4-hour chart on a T3 moving average crossover to the upside. So that's all green and bullish. Again, same picture as we had there on the YM. YM actually popping up above, but it was the TF Russell that were right at the 144 EMA, and the same picture on the NQ here as we hit that 144. So if we find that this holds in the resistance, we might not just have enough momentum to get back upside, get that 50% fib line, 61.8, or even some of those open gaps up above. Now, again, same picture to the downside on the bigger picture, weekly and monthly down here in the bottom row to the right. And then to the daily, again, making that trek back to the 50 EMA up here and holding above the 5 SMA. All right, so there's our big picture on the NQ. As the ES, same picture, 100-tick range chart holding upside in the green together with the 4-hour chart. Globex pushing above that 144. Love to see that. Monthly and weekly still downside, but holding above the 5 SMA. Making our way back to the 50-period moving average on a daily chart and approaching that 50% line, 1940. That could be a line in the sand, 1971.92, 61.8. Beware that while we have open gaps below, we also have an I call these major open gaps. That's where price action actually gapped up overnight, managed obviously to come back down, but left this hole here. And it's not a huge hole like we have on the ES up here. Some of these a little bit larger here, all the way up here at 2030, which, you know, eventually the market will return and close those out. Not right now, but it's not as serious of a gap, but a gap is a gap, and my belief in the market is that when it comes to the indices, market action will always close out former open gaps, especially serious ones. Whether it takes a month or 2 months or 2 years, they eventually get closed out. It has nothing to do with intraday setups. It's just a level to raise awareness to. All right, so there it is, ES 1940 at 50%. Watch that line to the upside. So again, bigger picture, still to the downside, but short term leaning a little bit to the bullish. I still call this bearish neutral, but definitely the Globex and the intraday right now siding to the bulls. Let's wrap up here with the crude. Crude again on the kind of split here. We got a upside, and price action now hitting them up the T3 moving average, the 10 EMA. So still bearish here, but bullish. So split on that. As now what I see here as the price action, unlike the others, which has just broken above, you can see crude here. At least for 2 sessions, finding support here at the 144, not being able to break down. Obviously, the big picture still downside, but on a daily, we've already crossed upside, hanging above the 5 SMA, so a little bit of volatility switch there. Price action looking to see what it will do here at the 50, but definitely on the bounce upside, beware that we did come up to the 50% fib line. We did come up to the 61.8. We did not break above that. We do have a serious open gap up here. We closed this out. That was back in January 21st. Price action gapped up and then came back down, closed out business, so we can get rid of that. And our next open gap down here. So eventually I could see crude still coming down. We'll see that what happens here at the 144, and definitely on the Globex position to the upside. So looking at the big picture, as we saw in the chart here, this is what I post each morning. Take the time to check that out online. Each morning I evaluate where's the Globex overnight. This is going into Sunday's open today, January 31st, last day of the month. Mostly for the Globex from Friday's session was all in the bullish territory. Again, we saw that on the short term. Some of the markets right at the 144 EMA. Some of those finding support there on the crude. Still a bearish neutral on the crude because the moving averages haven't crossed over. But again, not completely in a bearish trend for the short term. And again, short term, I look basically on a 4-hour chart, so we're only talking several days here. Long-term picture still remains majority to the bearish side. Again, the 5 SMA, we have a little bit of price action holding above it. The only one that's gone bullish is the crude. And we talked about those major open gaps, not just open gaps, the levels, but when we have a price action that gapped up and never looked back, we closed those out on both the TFYM and Q this last week. But when we look upside, yes, we do have serious open gaps all the way up to 1131.8, 17,336, as you can see here, the levels. So make sure you check that out online each week. So how do we wrap this up? Again, I always like to go back over knowing what the big picture is. How do you manage, how do you look at this on an intraday basis? And a great example this last week after Friday's price action, similar action on all 4 indices. When you have the shorter term picture, we're not talking about short term, long term. Globex, we're talking about intraday. We're talking about 1-minute charts or range charts, whatever it is that you're looking at. When all 4 charts are in sync, there it is, buy signal on the ES, buy signal, buy signal, buy signal to the upside. All 4 charts in sync, which makes a higher probability trade to keep you in trend. Now, whether you go for 1 or 2 ticks or you go for the long trend here, the whole idea is that as much as you can have in your probability strength that is all in trend, more the power to you in your trade, because obviously the momentum is moving in that direction. And as I post every day in blog, please pay note to the 5144 chart day after day. I continue to use this chart as a means to find support. Where is not only support off the EMAs, but what is the technical direction on these charts? So whether it bounces off the 50, bounces off the 144, almost comes on the 144 and bounces back up, Price action here, the technical bias is all in the green. It's all to the bulls. And so when you take a look at the entry on the shorter time frame or whatever, 1 minute, 2 minute chart, whatever you're trading, look for the setup, look for it all in the green. Here we have the T3 moving average, the 534, the 10 tick range chart here on the ES, and a 5144, a strategy we talk about every day in the trading room. But when you see this price action setup and you know that your Globex position is in the green, regardless of what your daily picture is here, or your weekly or monthly picture here, as long as your Globex positioning overnight day picture, it matches up with your range chart, you have even a higher probability. Not to say you can't trade in both directions, but makes for some very, very powerful moves. All right. So what are we looking at ahead of the week? Let's bring up a couple things here. Looking ahead, make sure for the economic data for February, starting out, we're going to be nothing major other than a couple red star events back here on Friday with employment and international trade. ADP employment, always a mover in the market. Watch that petroleum status report these days. Seems to be bringing in tow the other four major indices with it. Also, the natural gas report on Thursday. And then we're starting out Friday with PMI, ISM, and construction spending. So no heavy hitters, but enough for the market to center itself around and to move ticks in either direction based on whether good news or bad news. Market will always react. I want to make sure you guys always continue to check out my website, tradingfibs.com, where each week I post a variety of different blog posts. Here are last week's weekly results as the recap and the outlook. And then each week I've gone ahead and instead of a day-by-day trend, which I've done in the past by just doing a session focus for each day, you want to check out the trading session focus on the ES. That was last week's market that we focused on in the trading room with 19 setups, 492 ticks, and again, day by day, taking out some of the key trades. Again, I post these online each day, but if you want to recap with a little bit of a description, you can go ahead and check that out at my website at tradingfibs.com. All right. Also wanted to put a shout out to one of our fib traders and one of our coders in our trading room, Mr. Ed C. here, posting on YouTube. Again, I'll put that link here in the post, as well as the newsletter, and you want to make sure that you check that out. A combination of using different levels and Fibonacci's to the T3 moving average trend change and some other indicators that he uses as well. So kudos and thank you to our intraday day trader Ed C. for doing just that. All right, I believe that concludes an insight into the state of the indices and outlook for the end of January leading into February 2016. Feel free again to stop by at tradingfibs.com or any of my social media outlets to obtain more information. My mantra of one simple strategy: any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at tradingfibs, and always I leave the crystal ball to the experts. I only trade what's in front of me and on my chart. So as we head into next week, I really do see future indices after rallying upside with plenty of room to move, close out upside, open gaps and points of control. By no means does this indicate that the market may not drop down as well. We continue to close out previous days open gaps, as said before. For the short term, shows technical bias of support and no return as of yet. For the long-term pick, markets clearly remain in a downtrend. Short-term pick has approached to pretty much a bearish neutral position on the 4-hour charts to the 144 MA, which can go either way. Decision time really coming this week. Crude finding support at the 144 MA with no indication of a downturn yet to continue. It really is the overnight session followed by the intraday pick that will guide us to close out upper levels, and with that eventually turn the long-term pick or simply just turn it back down. Caution to the wind, Jedi traders, as to which source you receive your market outlook as at the end of the day, it really is merely a flip of the coin as to who will be right and who wasn't as to the course of direction of the market in the week to come. Your safest bet is always follow the momentum on any given day. Until then, always ready in both directions. Have yourself a Blue Zone day, good night, and good trading.